Yeah, okay, Steve. This US election has created some significant volatility, I think, through markets in the last week or so, and I think in the coming days too. So we're looking at some key charts today for you all.
It's going to be interesting.
Hello, everyone, and welcome for another of our Trader Talks videos with myself, Richard Perry, market analyst at Handtech, and also Steve Miley, the market chartist. Now, as ever, we will be pointing you towards our website, hmarkets.com, where you can sign up for a demo account very quickly, or even a live trading account in 4 easy steps. Now, this US presidential election, Steve, massive for markets this week. Big fundamental events all over the place, actually. But you look at the presidential election backdrop and you think Biden victory seemingly risk positive, isn't it?
Yeah, we've certainly had that reaction, a risk positive. We're obviously already rallying Monday, Tuesday, anticipation of likely a Biden victory, looking potentially for the blue sweep of all 3 legs of government in here. Looks like the Republicans have held.
Didn't get that blue sweep though, did they?
No, Republicans look like they're going to hold the Senate in here, but markets have taken that positively as well. I think just because you won't have as much corporate interference maybe from the Democrats because they won't be able to get it through. So tech has really led the way back higher in here over the last 24 hours as the election results have come in, assuming a Biden victory, which is still an assumption, but it looks like it's a good assumption.
It is an assumption, but I mean, the US futures are up again today. It seems as though that yesterday morning the markets were sort of progressively moving more in the Biden direction, and it certainly looks as though that continues to be the case. Now, the chart that I'm looking at is the DAX today. DAX, I think, benefits certainly from risk positive, and that's an undoubted situation. And obviously the US under a Biden administration should be more positive to Europe, so that is DAX positive. And we can see that the DAX has climbed, but it's climbed technically into a key resistance area. I think this is big pivot territory. You can say that there are resistances sort of 12,540 to 12,600, but I think the big move would be above 12,720. That is a little reaction high that we saw on the way down, but I think if that can get through there, then we can really see the upside move open, because I think the momentum is also a key pivot area. 50 on the RSI is basically an unwind at the moment, so it needs to continue to move higher. And this reaction, this positive reaction we've seen in equity indices, needs to continue. Otherwise, we could start to see some unwinding moves. As I said, that I'm not as bullish as you are, I think, on Biden. I think it's positive the fact you'll get a COVID relief package, but essentially he wants higher taxation and more regulation. And if he's pushing for that, then it's not especially a great setup, certainly in these COVID times.
Yeah, sure. Yeah. I mean, I agree. Technically, it looks very strong. I think, you've got on there on your chart as well. I see that 12,250 level, which was kind of the breakdown, almost like a neckline, wasn't it, to whoever's a head and shoulders or whatever.
We went for 11,000 at that stage, and obviously there was real turmoil in markets, and then we saw some support coming in at 11,460 on the DAX last week, and then we've rebuilt from there as the fundamentals have taken over once more.
Yeah. I mean, for me, what it looks like, I think you've neutralized the downside right for now, but it doesn't necessarily set it up for more bullish. I mean, bullish again, probably for now, the next 24, maybe 48 hours. But as you say, we're kind of coming to pivotal. If it takes that 1260, 600, 12,720, then it's looking a lot more bullish. If it rolls over from here, then we're probably back into a range environment. And then the threat is record COVID number of cases in Germany again today, right? So, we've got all that backdrop, lockdowns, further lockdowns coming across Europe. It's not just the big, it's not just Germany, France, UK now. We've gone into lockdown in the UK as of today, but, we're seeing it elsewhere as well. Greece, Austria, Belgium, Denmark, all over Europe in here, further lockdowns, rising cases. So that backdrop maybe sees then this being more of a relief rally, as you say, and maybe not the next bull leg.
Yeah, I think obviously this resistance, I think, is going to be key to how far this rebound can go.
Yep.
So you're looking elsewhere. You're looking at the Forex space and the dollar Canadian.
Yeah, so looking at USDCAD dollar CAD in here, which is looking more negative. That's US dollar negative, Canadian dollar positive. So just a quick macro backdrop on that. We've got the oil chart, which we're going to see in here as well, where we see oil has had a significant rebound, having had a significant sell-off. Again, rebounding with this move to risk on. So that's positive for the Canadian dollar. So dollar CAD lower. And we're also seeing then, again, I think Biden potentially more conciliatory, as you mentioned there, towards Europe, probably more conciliatory towards his neighbours, Mexico and Canada, putting a positive spin for CAD. On the chart, technically, we're in this big triangle. It kind of tried to break out the top of the triangle up to 133.90 and fouled below that 134.20 peak last week. And now we're back knocking on the door on the trend line support, the triangle trend line support. If we break below that, I quickly see 130.75, and then maybe the low that we posted earlier in the year at 129.90, and then we've got the actual low of the year from the very beginning this year, from January, at 129.50. All of those are fairly nearby targets for me.
Yeah, I think this is again very much a dollar story. US dollar is under pressure, I think, certainly on a near-term basis from a Biden victory. It just depends on how far that dollar weakness goes. I think ultimately, pretty much Biden or Trump would have set up for a dollar weakening event. The near-term volatility aside, I think dollar comes under pressure from the loosening Fed and also the COVID rebound that we're likely to see in 2021. But still, I think that there is a question mark around these levels, 29.90 to 31 big figure area on dollar CAD, and we need that oil price to really go higher. Yeah, and I think that is a key factor. But yeah, Biden should be positive for the Canadian dollar.
Yeah. And then just to say, if we do break down though through these supports, then kind of opens the door to below 128 down to like 127.80. We've got a key support low down there, and you got the measuring target for the triangle. Yeah, so all of that looks very, very negative in here if it does break these supports. But again, it's similar to your DAX chart, right? Poised at resistance on DAX.
Key pivot areas,
yeah, key pivot areas. So if these start to break down, and then on dollar CAD, then I can see it certainly going down to those levels.
Yes, I agree, Steve. So thanks a lot, Steve, and we'll speak to you all next time for some more trader talks. Good luck in your trading, everyone.